All right, guys, welcome back to this week. And like I mentioned, we're kind of in a series right now. Last week we talked credit repair. This week we're talking home mortgages and kind of getting deep dive in that because the goal was to, hey, someone you want to buy a house in 2021. And let's talk about meeting that goal and bringing kind of everyone in together. Next week, we'll have one of my real estate agent friends coming in to talk about the real estate process. But this week we got Brandy Whitmire with us, and she is our mortgage professional. Brandy, welcome to the show.
Thank you. Appreciate
Now,
it. Here.
I typically will have my guests just kind of give us a little bit of background history, who you are, how long have you been in the business? I guess what qualifies you as a loan officer?
Okay. Well, yeah, like I said, I'm Brandy Whitmire. I am a nationwide lender. I've been doing this in April 22nd, it'll be 21 years.
Ooh.
I started out in real estate. I started out like helping out a team, doing stuff on the real estate side. I became a realtor. I got tired of dealing with loan officers, so then I became one myself, and then I was double bagging deals, and helping out clients, and on both sides. And in 2011, the real estate part of it, of course, I can still do, but I do it just more personal, like 'cause I do flips. Development flips. I've got projects in California and Texas right now. So I do a lot of my remodels, building development. And like I said, I've been a loan officer since 2004, but been in the business now 21 years. And I am nationwide. I have 50 of the 51 licenses as a loan officer. Got my branch up in 46 right now. So like I always like to say, like if I can't do it, then I'll find out who can. But if I can't figure out a way to do it, then it's probably not going to happen.
Yeah. And that's one of the main reasons why I had you on the show, because I knew your net goes pretty wide across the United States. And, as I've talked to different people, it's always been, especially as we bring real estate agents in, every state's a little bit different. But, getting a mortgage, for the most part, I would probably say would be kind of the same across. I'm sure there are some minor differences within each state and state laws and things of that sort. So it's always nice to have someone that kind of has that broad experience. Now, as we jump right in, so as we talk getting a mortgage, it's probably, and me being a former realtor, it's probably the not pretty side of buying a house. Would you say that it falls in that line there?
Yeah, I mean, I always like to say, someone's appraisal comes in low and they're like, "You're terrible." I'm like, "Wait, I'm not the appraiser. I didn't even see your house." Someone's credit score comes in low, or the price or interest rates go up, and they're like, "You're terrible." I'm like, "I'm not the Fed. I didn't. I'm not. I didn't do anything." So
Right.
that I think that's the hardest part for me, because I do take things very personally, because this is my business, and I take, I when people tell me like, "Don't take it personal," I'm like, no, this is how I take this very personally, and you don't want someone who doesn't. Right. So for that part, it is kind of hard sometimes, because sometimes you're like, listen, I'm here to help you, but people, you have to be very careful, because you're dealing with people's, finances, credit, the value of their home, them being in a moving truck, the moving appraisers, I mean, you're like inside someone's life, so it gets real emotional. So it's very important that like I know how to fix credit. I've been a real estate agent for 21 years. I started out as a real estate agent. I'm not active right now, but I can do. But it's important to have someone that knows how to negotiate for you. That's like, okay, here's a problem, I can solve it, because I've been on that side, I've been on this side, I know what I'm doing. Multiple states and things like that. But it's not pretty, because like if a deal falls through, it's, I always tell my team too, I'm like, listen, as an underwriter, a processor, an appraiser, or your credit, or, whether it's Equifax or whatever, when something goes wrong, they're seeing my name, and that's really it, and same with the real estate agent. Like, something can happen sometimes an appraisal can come in low, or repairs need to be done. They're like, "You're terrible." I'm like, "No, the house is falling down." Right. Okay, let's just move on, so because of that, it's not pretty, but that's really the only thing for me. Otherwise, it's knowledge. It's knowing how to quickly react, having a good team behind you, working with the right agents that understand that we're working with you, not against you, you know, and going, hey, we're a team here. Like, here's a problem. Let's solve it. Okay, how can we work together? And for the client, before the client even knows, you know? So,
Right.
but, you know, that being said, on, you know, being client facing, it's, you know, people get really worried about putting in their information in an application, like, oh, you're going to ding my credit score is going to go down if you've, you know, hit it. I'm like, well, it does a couple points, but it raises back up, and there's literally no way to get approved for a loan without doing it. So it's not enough, you know, you have to do it. So because of that, it looks like, you know, like I'm grading the experience, but it's really, I'm here to help, because if you're coming at 698 credit score, I'm going to tell you what to do to get to 700. If you come and you say, I don't really have money for down payment, I'm going to tell you how to do it. I always say it's not a matter of if, it's a matter of when you're approved. So I don't care if you come in and you don't have a job and you have a 400 score. I mean, we have some work to do, but okay, when your score is this, and here's how you do it. And when you have a W-2 job like this, or you've been self-employed for this long and been claiming this on your IRS, that's when you're approved. So let's work towards that. So that's why I always want to tell people, I don't care if you have no money and you live with your parents or whatever, like, you know, I'm going to tell you exactly what the steps are going to be to get where you need to go. You know, some people right now, you know, especially with COVID, like, people are self-employed, and I've got people in $2 million houses that are like, hey, my business went down and I can't refinance them right now. But I'm like, hey, I need it to look like this, and this. Like, this is what you need to do. This is what you need to pay off. This is what your score needs to be. This is what we can do. We can split up the loan, do it like two things, so we're not in jumbo, things like that. So I always have a solution, I guess, is the point. Like, don't be afraid of it. You know, whether you're client facing or realtor facing, like, don't be afraid of it, because there's always an answer. It's never no declined. There's never a decline button.
Right. You know? And as we dive a little bit deeper, and one of the biggest things that I wanted to do as we kind of set this series, this 3-part series on buying a house, tell me, just from your experience, what is the biggest misconception for a new home buyer going into getting a mortgage? Like, what don't they know about the mortgage process that we can probably just help set that expectation now, so as they do start the process, they kind of know what to expect going into it?
Yeah. For new home buyers, you know, a misconception would be maybe that you need 20% down, or that you need 3.5% down, or that you need 3% down, or you need 0, or there's a ton of closing. Like, every situation is different. There is a VA loans, like, you know, right. VA loans that are, you know, $0. You don't have to put anything down, but there's still closing costs. But can we get those closing costs paid by the seller or by the lender, by me, with the lender credit? That's basically you paying for it with your interest rate, right? But there are ways to do that. Are you working in a rural area, or looking in a rural area that's a USDA territory? That's 0% down. We have conventional loans with 3% down. You can have sellers pay closing costs. You know, a lot of realtors don't want to do that. I mean, it's harder right now, but that's still an option. It's still an option. You know, like, you have a good qualified client who's like, hey, I have the money, but I have $100,000 in the bank, but I only want to bring the minimum down payment. I'm like, okay, let's look at what I can do for lender credit. And hey, if that appraisal comes in a little bit higher, let's roll in some of those closing costs, basically as a seller concessions. You just bump up the, you know, the misconception is that you have to have, like, it costs so much to get into a house. Not necessarily. It depends on the house. It depends on, is it an investment home? Is it a second home? Is it your primary? What is it? So always like say, like, let me look at it. And you don't know what you don't know. So I need an application. I need to know what scores. You know, you go out there and Credit Karma says you're at 760 and you're actually at 720. Are both of those scores great? 100%, you know? Right. So, you know, like, but I have to have my score. You know, consumer credit is not, I mean, it's a good guide for you to know what bills to pay now, what's showing up on your credit report, but those scores are trash. They're irrelevant. Like, they're not real. They're based off, you know, they're analyzed, like synthesizers, you know, like, okay, if this happens, this and this happens, you know, it's like Zillow for appraisals, right? Like, it's not a real number, you know?
Right.
So I guess that's what I'd say is that, or my credit score is not high enough. I only have a 620. Well, that's fine. I don't care if you have if you have a 580, if I pull in the credit, I can tell you, like, if you do this and this, your score is going to bump up. Do this while we're in the process. So it's not necessarily that you have to have a specific credit score. You don't have to have a specific amount of money in the bank account or in your bank account. You don't have to have a specific amount down. That could change based off the home that you're buying.
Right. No, that's great, because a lot of what we talk about on the show is building a plan. And one of the first steps even a real estate agent is going to tell you to do is to talk to a mortgage professional and actually apply for a loan. Now,
Right.
can you tell me what the difference is, just in terms on what the difference to be pre-qualified as compared to being pre-approved for a loan?
Yes. So essentially, whenever you do an application, this could vary depending on the loan officer that you get. It's very important that you go with a loan officer that understands what your goals are, what you have, and what's going on. Because there are certain situations where if you come in and you're a W-2 borrower and you have a 720 score, and I look at your bank statements and there's 10, 20, the amount of money for the down payment I need in there in your checking account, we don't really need a whole underwriting process, because at this point, because two things get approved when you're doing a loan: you as a person, or the couple, or the people, right? The people, and then the house. But if you're self-employed, or if there's commission income, or if ratios are close, or there's a lot of debt on there, or the scores are low, then you want to then go in front of an underwriter. So if you come in, like, you get these internet lenders and stuff, you got to be careful, because you put in your application and they spit out pre-approval letters without looking at documentation. So getting pre-approval, like having a qualification letter from the underwriting or even from a loan officer, is I have reviewed your asset documents. You didn't tell me you had 30 grand in the bank and then there's 1,200 with NSF charges. That doesn't mean that's a problem. I just need to see it. I need to know. I need to say, okay, not this month, next month. Okay. Or, hey, what's going on here? I need a letter of explanation. Or can you get a gift from mom and dad? Or do you have a 401k did you know that you can borrow from your 401k for a primary home without penalty? Possibly. You need to look at your 401k statement. You need to understand without, but did you know, like, there are, once you dig a little bit deeper and once I start asking questions, I'm like, hey, do you have this, that, and the other? They're like, actually, yeah, well, my brother is actually going to buy with me. So can you get a loan? I didn't know if we could do that. Yes. Oh yeah, well, dad said he would do that. Okay, great. Well, hey, I'm just out of school and I'm rebuilding myself and I only have 1 year of W-2. Mom said that she would co-sign. Brother, whatever. My girlfriend, my fiance. Oh, I thought we had to be married to be on it. Like, I get all kinds of questions. And I'm like, that's funny. That's still a question, like, because we do this every day. I do this every day. So I'm like,
yep.
Oh no, let's do that. But that's why it's important to work with someone to ask the right questions. That way I'm understanding exactly what you have available, and I go, oh, that's easy. We'll fix it. That's okay. Then here's the plan. Here's what we're going to do.
Right. No, that's key, because just like when we buy a car and things of that sort, so much stuff comes into the mail. Hey, you're pre-approved for
pre-approved.
And then
that's basically saying, like, I saw that you have a 620 score and you might have a job. Like, okay, you're not actually verifying. So you don't, as a realtor, you don't want to put someone in your car or drive behind them, whatever, and go to a house without them being pre-approved. Like, you just don't. And even as a client, as a borrower, as a homeowner, as someone who wants to go buy a home, you don't want to go start looking and then realize, oh no, I needed to do this or that. Like, you don't know what you don't know. So you really need to do the application and have someone thoroughly look at it and get actually qualified, not just a random pre-approval, so that because then you're safer. Because what if you get, we can increase your score 2 points and it helps me get you an interest rate that's a quarter less, or a half a point less. That's what we want to do. And we can do that through the process, And that goes with refinancing, taking cash out, to buying a second home. A lot of people are buying recreational properties now, investment homes, and building out their portfolios. A lot of people don't understand that. They, what, the big thing right now is hey, I want to keep my house and rent it out. How can I get another one?
Right.
You
Yeah.
know, how can I do it where it's contingent? I'm like,
It's
I don't
crazy.
know.
It is so crazy right now because I know, I still have a lot of folks in real estate and the markets are just crazy, but people are starting to realize just with COVID on, what I can afford, what I can't afford, I can actually open up and build on my portfolio and things of that sort. So it is crazy to understand that, but it's also, whether you're buying a house for the first time or the 10th time, it's great to know what your actual buying power is, because like you said, as time is of the essence in a lot of these situations, mainly more so on the real estate side as you start talking contracts, because you have time to work with the clients if you need to fix things and things of that sort. But if to avoid that whole, I spent 3 days looking for a home, and then as I started the loan process, I find out that I'm $20,000 shy of being able to actually afford the houses that I like, because that house is 350 and I'm only now going through the approval process, and I can for 320, and I have some work to do if I want to get there. So again, guys, it's important to make sure that you're going through that process. Now, Brandy, as we talk the process, so someone come in for the first time to a loan, what are they going to need to bring, and what other documents are they going to have to maybe scrounge up or plan as they sit down with a loan officer like yourself to get approved for a loan?
Yeah. So the first thing is going to be to fill out the application, because that's where I get the credit, right? And from the application, you're going to tell me where you work, how long you've worked there, what your income is. So those are the things and how much money you have in the bank. So really what I want to see is your asset statements, even if you're not going to use them. For example, like I said, I want to know if you have retirement, because what if you decide, hey, I want to pull from that. This house needs a little bit of work and I want to use my cash to do that, to do some work and increase the value because I found a good deal. So I want to see your asset statements. Don't worry if it's little or big. Like, it doesn't matter to me. Like, I need to know where we are. So like you said, the buying power, right? And then I need to verify that your income is what you think it is. Sometimes people put in there like, I make $4,000 a month. And I'm like, honey, that was take home. That was take home. You're actually making $6,000 a month. You just sold yourself short, so I want to look at that. Or if they're self-employed, so I've got to go redo that. So basically your income and asset documents are really what I want to look at. And I'm pulling in your credit report and then I'm mixing it all up and looking at it. And then you're going to tell me like, hey, I'm looking at a $350,000 house or 300, 200, whatever. And then I'm going to back into that number. So you might say, hey, I love this $350,000. And I'm always going to say, send me an example house so I can show you. Right. Like if you go online and even if it's not one for sale, be like, if it's one of your friends' houses, right? If you want let me back into that number for you, because you don't know if there's an HOA on it or if it's how much the taxes are on it. I'll estimate insurance that stays around the same, but is it in a flood zone? Is it are we right at the edge of the debt to income ratio, or do we have room? I'm like, okay, this one's going to be about $1,500, $2,000, $3,000 a month, but your ratios are so low, and I've already verified your income. Like if this fluctuates $200 or $300, it's not a big deal. Or I can be like, hey, you can look at that $350,000 house, but we are on the edge. So I can tell you that unless you pay off this credit card, and then I have more room. So I want to see exactly where we are. Condos have high HOAs, so some can, sorry.
Right.
Condos have HOAs. Let me just say that. Some are $50, some are at the Ritz right here and $4,000 a month.
Right.
$4,400 a month. I was like, okay, if you want to do it, let's do it. Let's go. I'm in if you're in. But so those are things. What are the expenses? I really need to look at it. It doesn't take me long. I just need to know what we're working with. And if you're I'd really, some people don't think that they can afford the house that they really want. And right now rates are low. So people were like, I can't believe I was able to afford this $350,000, $400,000 house, and I'm paying $2,000 a month. And I'm like, well, rates are low. You had this, I was able to get you I have programs that have no mortgage insurance, even at 95% conventional. depends. I have to look at it. If it depends on if there's one or two borrowers or like, but
Right.
that sometimes can be $150 a month. That's gone. So that's awesome,
Yep.
and you still have a low rate. So anyway, income and asset, long answer to your question, but it's really income and asset documents. And I do like to explain that because depending on that situation, that's what I need to look at.
Now, is there a time frame that you're looking at? Hey, I need to be at my job 2 or 3 years, or younger borrowers may hop from position to position, moving and making more income. Is there, are you looking at as that as well?
If you're a W-2 employee, we like to see 2 years. I can get away with 1 year, depending. But if you were in school before, I just document that. Not a big deal. If you've jumped around and you can show like, hey, you're making lateral or step moves, either in position or income, or you moved out to another city or something like that. You just don't want to see a big gap of employment, like over 30, 60 days. Even then, it's a letter of explanation. But like, obviously, we want to make sure that you're a stable person. But just some people are like, oh, I haven't been at my job for 2 years. I'm like, that's fine. I need your W-2s from each one. I need to prove. I need to go get verification that you worked at these places. But that's not a big deal. It's totally fine. If you're self-employed, we need 2 years, unless the business has been up and running for 5 years. I only need 1 year tax return. 1099, same thing. So we want to see 2 years, but we go income versus expenses, P&L. If you run your own P&L, or and then again, if you've been doing it for 5 years, we can run with 1 year. But I guess 1 to 2 years is basically what we want to see. But we just want to see that you've had stability for the last 2 years. Really, we only need to verify the last 2 years in general, but it's okay at 1 if there's a reason for it.
Yeah, most definitely. Now, as you go through the process, explain to me a little bit about. I know there's quite a bit of different programs, but as we talk loans, I guess what would be a clear definition of a conventional loan as compared to something that may be an FDA loan, or FHA loan, or USDA loan. What kind of are those lines of differences that someone may expect to hear as they talk to you?
So a conventional loan, that's basically up for grabs for anyone. So you can have it as a primary residence, a second home, or an investment. As a primary, it's technically minimum 3% down. Oftentimes it doesn't make sense to do that because the costs are higher. So more than likely, it makes more sense to put 5% down, but that's dependent. But on a conventional loan, you can do a second home or an investment home. Okay, and as little as 3 to 5% down. If you don't have 20% down, typically you have mortgage insurance. But like I said, I do have programs within conventional that don't have mortgage insurance, monthly mortgage insurance, for not having 20% down. FHA is it's 3.5% down minimum. Okay, and it's only for a primary residence. So FHA, it's always going to have mortgage insurance, no matter if you have put 3.5% down or 50% down. But the guidelines are a little bit lighter. So if you have a lower score, or if you have some weird stuff going on, their guidelines are a little bit easier for the borrower. So if there's some bumps and bruises somewhere, we can probably sneak you in there. But it is primary residence only. VA, you can go up to 100% financing. It's primary residence only. Well, there are loopholes on that, but it's for veterans.
Right.
USDA, 100% financing, primary residence only. Again, unless you're moving, there's some loopholes there, whatever. But that's primary residence only, and you can do up to 100% financing on USDA as well.
No, awesome. And yeah, because a lot of people coming into it, they're throwing all this around, and I know a lot of people are really concerned on, okay, well, what's the percentage down, because each of them come with their own terms and things of that sort.
Mm-hmm.
and again, even if you're looking for investment properties, there's all kinds of different ways to do it. Now, as we kind of continue down that rabbit hole, for someone with a first time buyer, you've been touching on just different programs in general. Can you just touch on, the a few different types of programs that you may have that are kind of maybe not mainstream, or not even, most people probably don't even know. One that typically pops out to me, some banks have it, some don't, is like a first time home buyer program. But I know there's more to it than just that.
Mm-hmm. Yeah. So first time homebuyer programs. Well, first, that's kind of a gimmicky line because it really is for anyone, except for there are some that says like down payment assistance programs that say if you've owned a home in the last 3 years, or if you haven't in the last 3 years, then you can now be a first time home buyer again. So just be aware of the gimmicky first time home buyer thing, because they're really available for everyone. I mean, a program is a program. However, like I said, first time home buyer, a lot of those people, a lot of places call that the 3% down or home possible for conventional. Okay, so that's been being labeled first time home buyer. FHA 3.5% down. A lot of people think that FHA loans are just for first time home buyers. They're for everyone, but lenders will call it that. But that is for first time. That's for any home buyer, but you don't have. It doesn't have to be 3, because sometimes people are like, oh, I can't do FHA because I already own a home. Like, yes, you can. So just that's why I want to say be careful of that, because I like to be like, hey, for my first time home buyers, we're going to do this. It's a way to get the interest, like to teach you, like,
right.
Please inquire so I can show you what you actually qualify for. Because there might be a first time home buyer program, but you're in USDA territory. And I'm like, why would you even do that? Do 0% in USDA. You're a veteran. Why would you do that? Do this, Right. A lot of what I think people are talking about when they're saying first time home buyer program on the marketing side is that there are down payment assistance programs that are available. So it's usually county related for, every county, where it's, Travis County, Dallas County, whatever county. You want to go down payment assistance program in whatever city you're in. And they'll pop up. For example, locally in this area, again, I'm nationwide, so we do them all over the place, but there's something called T-Shack and Seth that are ones I really like to use, and they will give a grant of anywhere from 3 to 5% for the down payment. So if you get a 5% grant, this is awesome, because if you go FHA and you do 3.5% down, you have a whole 1.5% left over to pay for the closing costs and your escrow account. So it makes your cash to close really low. So there's income requirements. Some of them are you can't make more than 60. Some of them you can't make more than 80. I just saw one that you could make more than 120. I'm like, great. That's a lot. I'm like, well, everybody's grouped, So, but you have to have a certain kind of credit score. So you just want to look in your area and go, okay, and then ask your trusted lender. You can ask me, obviously, but you ask a trusted lender if you have one. Are you set up with this program? Because as a lender, we have to be set up with the down payment assistance programs to be able to offer it to you and reserve the money, that 3 to 5% in grant that they're giving, to give it back to you.
Gotcha. No, and that hits the nail on the head, because what I was really trying to drive, and so that everyone can hear it and understand, like, there are multiple ways to skin this cat of buying a home and getting a mortgage. And Brandy has said that multiple times, and it is, every transaction is personalized, to you. And if you are out there looking or thinking about buying a home and you're kind of on that fence, again, having the conversation, and you guys have heard me talk before about asking the questions, and this is why I bring guests on like Brandy, and we'll make sure her numbers out there, and how you can contact her to ask these questions, because without the knowledge, a lot of people will be gun shy to actually move forward with the process. And then once you actually get moving in it, you would be surprised on, not necessarily how easy it could be, because anything can be easy and some can be hard, just depending on the situation, but how many different avenues there really are to putting yourself into a home. Now, Brandy, as people come to you, or new clients come to you, I guess, what are some of pieces of advice that you like to give them to kind of start them in moving them forward if they do get a little gun shy on it? And once numbers start coming on paper, people tend to get a little scared, because they're, for most people, this is the largest purchase that they're going to make in their life.
Totally.
How do you kind of help with the mindset, or what advice do you give them along the process, to not just like, oh, you know what, never mind, I can't do this. This is $300,000. That's a lot of money. Like, I don't make that. How do you help them along with that?
Yeah. Or they're like, 30 years, I'm 60. And I'm like, it's just amortized that way. It's built so that you can afford it. Then do 15 year.
Right.
What I like to tell people, like, if they're like, hey, can we get on the phone? Can we talk? This is my guy Clay. Can we talk? I want to, I'm sorry. Yeah. Okay. Sorry about that. Okay. As I say, so, some people are good behind the screen. For example, like they'll send me an email, it'll be like a novel. I'm like, whoa, but it'll tell, like, they'll say, they'll be so worried about something. And I'm like, not a big deal. Like, I don't even care about that. And they're like, oh, I thought that would affect them. Like, that this thing doesn't, or, oh no, that does. And here's what. So what I tell people, what is the reason why you haven't called me before or reached out to me before? Because it's something in your head. You did it because of fear, or you weren't thinking big enough, or you thinking that you didn't deserve it, or it was too small, or you didn't have enough money, or your credit wasn't good, or you didn't have enough stability, or you're scared of that commitment, or you don't know where your life is going and you think you're going to move, or blah 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 blah, whatever. Why didn't you tell me before? Why didn't you reach out to someone before? Because that, I want to hit that first. Because if you're like, hey, I think I'm moving next month, well, to another state, that's something that I need to know. Okay, then would you be willing to buy this and then sell it? There are costs, so you want to be careful. Or do you want to buy this? You could be an investor and lease it out, or keep it as a stay at home and then move out. Do you want to look at that? What's the reason why you're not reaching out? I want to know that first. Like, well, all the houses that I like in my area are $350, or they're at this price. And my friend told me that she was paying $2,800 a month, and I can only afford two. I'm like, well, did your friend tell you that this, her rate is this, and she hasn't refinanced? Did she tell you that she's on a 15-year? Did she tell you that she's on 2? Is she lying to you? How good is this friend? Is she trying to make you keep up with her Jones? Right. So I want to know that. Why didn't you reach out before? I'm in groups who are like, they say, like, tell me why you reached out. I like to say, tell me why you didn't reach out before. You didn't want to deal with it. It was going to be too hard. I was going to ask too much of you. It's going to be so much paperwork. It was going to be a nightmare. You heard all these terrible things about getting a loan, and you don't want to risk getting not approved, or to getting declined, and the investment and the time and effort. Tell me why. Like, oh, I heard a lot of people. I don't want an appraiser at my house. I don't know. Oh, okay, then let me see if I can get an appraisal waiver. Oh, I don't want to pay for the appraisal front. Let me see if I can work that out. Let me see if I even need an appraisal. There's gonna be a lot of documents. Well, let me look. And these are just pieces of paper. Like, sometimes we think things in our head are so big to us until we do it. Yes. I always tell people, like, has anyone ever really had to call AT&T for like months, and then finally when they do it, it took 5 minutes or even 30 minutes while it was in the background? They're like, dang, why didn't I do that before? Right. It's been lingering in my head for so long, and I didn't do it. Or like, you're like checking, your check engine light is on. You're like, and you stop somewhere, you're like, why didn't I do that before? Because it's like, oh God, I'm gonna have to sit there. I'm gonna have to do all the, and you do it. And sometimes that is a big deal, but the relief is there. So I'm like, why haven't you? What are you scared of in this process? What are you worried about? What are you already annoyed about? What are you already scared about? What's going on? Why do you think it's not possible, or whatever? And then let me go, I'll handle that. I'm going to ask you for small things at a time. little pieces of paper that I need. I'm not going to ask you for things I don't need, like a lot of those people out there do. They're like,
Right.
send me this and this and this. And I'm like, I don't, if I don't need tax returns, I'm not going to ask for it. If I don't need statements, I'm not going to ask for it. But if I need a statement, download PDF and forward it. Like, not a big deal.
Right.
Like I'm gonna help you make it not feel overwhelming.
Right.
So that would be the biggest thing. And like I said, you don't know what you don't know. I need an application to see. But if you have questions, at least like whether you want to talk on the phone or you want to just shoot an email or a DM or something like, hey, what would it take to get a, what would the monthly payment be on this? Or, hey, my score's this, or hey, I had a bankruptcy. And like, people like freak out. Like, I had a bankruptcy. And I'm like, how long ago? 4 years ago. What chapter? 7. I'm like, okay.
Right.
That's old news. I don't need to know that. What's your score? I'm like, I mean, I need to know that. But like, I need to know if you've had it within 7 years. But if it's been 4 years ago, there's all kinds of programs.
Right.
I have programs for 1 day out of bankruptcy if you have enough down. 1 day out of bankruptcy. So, and that's another thing. I broker out to a lot of people. So we're in an open space now. Like, we're not in a subprime situation. We're talking about like an open space of private lenders, of government sponsored entities and lenders, FHA, Fannie Mae, Freddie Mac, that kind of.
Right.
There's so many opportunities. So if you think that you're not going to be approved, I'm going to say you're probably wrong.
That's why I like you. and like I've said on my show multiple times, is you start to build a team, and buying a house, you build a team around you. You bring the right people in. And touching on that, if people are, again, Brandy's all across the country, so regardless of if you're listening here in Texas or in Arizona, California, reach out to her. But if they don't, what advice would you give someone that is looking for a lender? Because just like I've had conversations about real estate agents, I think you need to find the right lender that's going to fit your needs, just like you would a real estate agent. So what pieces of advice, if someone was going to, try to find the right lender, would you give them?
I mean, there's obviously bad lenders and good lenders. There's bad companies and good companies. Most of all, it's about the person. I right now where I hang my license, it is important to me because I need my resource, right? But there are loan officers that work within my company that I'm like, oh my gosh, like I would never talk to because they don't have the experience yet. But not only that, like, is my, I would say, be honest, do you feel like you have a hard deal? Are you self-employed and own 10 properties already? That's a harder loan to do, right?
Right.
Would I steer clear of internet lenders? I don't want to name names, but you know what I mean by that, like big box, like or even big company lenders. For me, I would, because you're a number that it's higher cost usually, and the underwriting guidelines are harder. So every product has a set of guidelines. Like you have to have this score, this, and this, but lenders have what's called overlays on top of guidelines. So guidelines on top of guidelines that makes someone not approvable. So you could be approved at one lender and not at another. So I would say, I hate saying that because I really don't want to push people away from any other lender. But if you have someone that you like, know, and trust already, start asking those questions to who you know. If you know someone already, if not, like go online and talk to someone. I'm always here. And for me, even if you don't go with me, I'll answer your questions for you. I would rather. That's why I put these educational videos out. I give a lot. I mean, I've had friends, which makes me cry. But like, I have friends that are like, oh, I bought a house. I see them online. I'm like, yeah. And then I'll see them out there and be like, I watched all your videos. And I'm like, you didn't. Yeah. But I truly am. Like, I'm joking and crying at the same time. But I am. But whenever I hear that, truly, they're like, sorry, it's my husband's brother. And I was like, oh, I couldn't get away from it. I really, really, of course, I want the business. But truly, if you have a question, just ask me. I'm not going to hound you. I'm not going to anything. If you don't want to move forward with me, if you don't want to fill an application with me, you just don't. If you have questions, ask me. Or I'm gonna be like, hey, you know what? There is times when like you might want to go to a credit union for that. Or hey, this would be a broker. I could broker out to this. Or if you tell me like, hey, my bank does this, I'll be honest with you. And
Right.
completely like, and things are on top of my head, so I don't have to go researching and things like that. I can answer your questions very quickly.
No, that's it's great. And because some people do, like everyone, right? Everyone knows a real estate agent. A lot of people know mortgage loan officers. And, again, ask the questions, because if you don't ask the questions, then you're not going to know. And, as cliche as it is, there aren't really a ton of stupid questions when it comes to this, because again, this is the largest purchase that most people are going to make. So if you honestly don't know, it's okay to ask. And I'm sure someone has asked the same question, maybe in a different fashion before. It's probably not something you haven't heard, for the first time. But again, go out and ask the questions, guys. Do the research. And again, this is a financial transaction. So yes, find somebody that you're going to trust and feel comfortable with. My advice has always been, at least go and shop, or at least have a conversation, right? And then, because for me, it's always, do I have a conversation, and do I feel like I can trust the person, or was it just like a short answer, give me your business, and then so to fill it out, because again, this is going to be a transaction where you're going to have your team together. And when I mean your team, between your mortgage broker and your real estate agent, those are going to be the people in the catalyst that will help you through this process the most, that have your best interests at heart. So as you guys are out there looking for this, you do want to feel comfortable, because both of them are going to work together. And the process can be streamless. I've seen it done as quickly as like 10 to 15 days. And some I've seen a little bit longer, but every situation is different. It's hard to, there is no cookie cutter, guys, out there. There's no cookie cutter process for a mortgage and or real estate transaction. There's not. Like, we can spend all day talking about what you can and can't do. There is no cookie cutter way, because every situation is a little bit different. And, folks like Brandy and finding a good real estate agent, they're there to protect you. And ultimately, that's why I bring them on, because I know Brandy well enough that she cares enough about the transaction to make sure that you guys are happy. And on that note, Brandy, where can people find you?
You can find me brandywhitmire.com, and on all the socials. It's at Brandy Whitmire on all the socials. So yeah, and remember, just because you've asked a question to one lender doesn't mean you're going to get the same answer at another, because lenders are different. So, please keep that in mind, and keep asking the question, and get with someone who's going to help you with a solution, not just answer your question and be done. Get with someone, get with a professional who's going to help you get to a solution if there is a problem. And also, for those of you out there purchasing, getting pre-qualified first and going and getting in a processor and getting into underwriting, that especially with inventory being low right now, if you are already that far into it where you're with a processor and you've already been looked at by an underwriter, your offer is likely to be accepted 10 times more, because one, we can close you faster because you're already halfway through the process. Now I just need to get the appraisal, because we already got you approved, right? Like I said, get the person approved and then the house approved. Getting the house approved is getting the appraisal done.
Yep.
So that means we're halfway through the process. So your offer will be a lot stronger if you have a pre-qualification letter from an underwriter, you've already gone through underwriting, and the time to close is a lot faster, because if it's between you and another person, and then the other person needs 30 to 45 days to close, and you're like, I want this house, I can close in 15 days. Don't do that to me if you haven't even filled out an application. Like,
right.
But I mean, not that I haven't done it, not that I can't do it, I can, but there's no reason to. Let's not stress everything out, like, be ready to go, doesn't mean you have to. And also, just because you fill out an application doesn't mean you're locked into anything. It just means you understand your metrics, where you are, what your power is, what you need to do, and and you have the power to press go if you want to. That's all that means. So not a big deal. It's not a big deal to fill out an app, but keep that in mind too, especially in this market with inventory being low. You want to be the best offer on the table. And sometimes the best offer on the table is not the cash buyer, or it's not the one that's giving the most. It's I'm already underwritten, approved. I can close in 15 days. I'm already sitting in processing, just waiting on a contract.
Yep.
Boom. The agent on the other side who's presenting all the offers is going to go, okay, this one's cash. I didn't see this, or this one's, this is, the VA loan, they're not in process, but this one has a letter from the lender, a qualification letter from the underwriter, can close in 15 days. And that seller's like, I want it done as fast as get it out of here. Right. They're approved. They've already been verified and all that. Let's go. So keep that in mind, especially on the purchases, that you definitely want to have that power whenever you're going in and making offers in multiple offer situations where the other agent's saying, send your highest and best offer by this time. The highest and best, there's two parts of that. Highest is the amount of money. That doesn't mean that's the one that's going to win. Right. It's also best. And that means fast. This seller's got to go. This seller has already made an offer on another property and it's contingent on the sale of this house. So they need to get this gone now, So keep that in mind.
No, most definitely. And like always, guys, we are going to have Brandy's info and bio on our website, projectlifepodcast.com. So you can link up with her there. Facebook, IG. I don't know if she's making TikToks yet. Maybe. Who knows? But like I always say, just be curious, ask the questions. This is another resource for you guys. Brandy, thank you for the time. Thank you for the knowledge. And I continue to hope that 2021 is the best for you. Crush this year. And we'll have to bring you back maybe in 22 and we can rehash the issue and talk about refinancing and a few other things.
Yeah, see where we are for sure. Thanks for having me.
No problem.